Hello guys. So today is the last day in May, which is 31st of May 2020. So next week will be, if God wills, will be June. Now I choose this subject, how to get high percentage stocks profits. It's a big subject, and the whole these live sessions I try to do my best to explain a lot of things that it is related to trading. A lot of things people know, they are just myths, they are not facts, and if you rely on a myth, you will have a problem. Hey, hola Pablo, how are you? So so as I told you, how to get high percentage stocks profits. So these kind of stocks, there are many kinds. Okay, there are many kinds. A lot of people they know because it is very well known. Okay, like penny stocks, most of the people they know. So hello Pablo, hello Saba, hello Shikar Sud, hello Fabian, hello Duna, thank you very much for coming. So as I told you, Shikar Sud and hello Top Series. I will answer your questions later when I finish my because guys, what I do here at first, I see what you have written and what you are writing, but before I will try to do my best to explain the lesson, and then we can discuss whatever. Okay? Now, when we say high percentage, it means a stock that you make more money than the usual stocks. Okay? Hello Abir Khan, how are you? So, a lot of people see penny stocks, but understand penny stocks, because the volume is so low, okay, stocks can move faster, because with 100,000 or 200,000, stocks can move too much. It can even double. Okay, if you take another big stock, 100 to 200, and you give 100,000 volume or 200, it might go $1 or 1% or so. It doesn't go that much. Okay, now hello Adolfo. So you know penny stocks, most of the people they know, but in usual, almost there are a lot of stocks, they behave like penny stocks, but they are not penny stocks. For example, you take a stock that it is $10, $20, $200, okay, and they move fast, so they behave like penny stocks, but they are not penny stocks. So take this idea from your head that only penny stocks can go faster. Now, I have showed you last week an example of Tesla. In few months, in 1 month or 2 or 3, it goes 300%. 300%. You can see it in penny stocks easier than a big stock like this. So now what makes stocks go so wild? Why? It's just people. There are a lot of day traders who trade daily these stocks. There are some swing traders. There are some positions traders. There are even some investors who they got recommendations to buy on that time. The same as swing trading. The same. Okay? That's why you see these kind of stocks go so wild in a shorter time. Okay? So and industries, most of the time, not all the time, most of the time, drug companies, technology companies, healthcare companies, a lot of these kind of stocks, some of them move too fast. But this is just something. But stocks that are alone, you can find them in any industry, in any sector. Okay? So it doesn't mean that only drug companies or technology stocks or healthcare stocks that they go faster. You go to them. No. In the whole market, sometimes some industries they buy it too much because of the news, because of recommendations. Understand? Duna said gas prices are increasing at the gas station. Should we invest in the energy sector? Listen, Duna, focus on the price. If something is moving, jump. If you succeed, it's a good. If not, you tried, and it's very good. Both of the thing, it's good, because you don't in the future. You don't want to have remorse, or you regret you don't get in on time. Okay? But I will show you later the energy stocks for Duna. I will show it to you, and we will speak about that. Okay? But Duna, since you are my student, please send me an email. You have sent me an email. Send me another email about indexes or ETFs or stocks, and we will discuss this tomorrow, if God wills. Okay? Now, hello Ramin Alazov. So, since we are speaking about stocks with high percentage, we say penny stocks, and then we say some kind of stocks in drug sector, and in healthcare sector, and in technology sector in general. And there are other stocks that belong to any industry. Even banks, credit cards, sometimes they go so wild, especially IPOs. Okay? Sometimes in industry, it has been bought a lot. You see that this industry or this sector is pushed too much. Because I understand that a lot of people have money, but they don't know how to trade, how to invest. So they listen to that guy, and they put their money there, and they wait and they see. Hello, Rahmatullah. So, this stock market is always mixed with opinions. But whenever people, they like something, it goes wild. And there is like a bubble. A bubble, which means people, they love something, they hear a lot of news, and everybody is buying, but they don't know why they are buying. This is because it's good. And this, you find it, for example, in TV. And most of you, you know someone, or a session, or a mission, or TV, like news, and they speak too much about company. Oh, this company, they might double, they might triple. So they force people to buy on the prediction of some good about this company, and the people, they just go and buy. Okay, they have no strategy, they don't know how to invest, they have no idea about the sector, they don't know how to do investing, they don't know how to go to fundamentals to see this company is good or bad, or it has loans. They don't know anything, they just follow the crowd. Okay, now let's drink some coffee. Before we go into details, let's go to penny stocks. Penny stocks, there are two kinds of penny stocks. There are some penny stocks that are manipulated. I have made a video like many years ago about this kind of stocks. Okay, so these kind of stocks are manipulated by scammers, traders. They are scammers. Okay, so there is one guy who sent me an email and he asks me how to do this scam. that is funny from him. I say, man, I am not a scammer to scam people, and I don't do that in order to show you. I know a lot about everything in trading. I know a lot, but it's not what I do. For me, I do the regular thing. Okay, I can make my money easily with trading. I don't need scams or manipulation, because those guys generally they are not traders. They are, as you might know, manipulators. And in the history of manipulation, it's a lot of scams. You hear some people who I have given the other time the story, but this is investing. This guy, he collected $80 billion from investors. Do you understand what does it mean, $80 billion? Because the people, since they don't know how to invest in stocks, they don't want to study investing, they don't want to learn, they won't just have the money, send it to someone. They tell them only 10% each year. Do you understand? Because they say, if we give our money to bonds, treasury bonds or municipal bonds, they give us 2% or 5% or 6%, 3%. So it's not enough. We want someone who gives us more. So 10% is the ideal thing for investing. Ideal thing. 10%. If you get 10% each year, okay, I think in 7 years you double your money, I guess. Okay, but don't think about $10,000 or $100,000. These people, they have millions, they have billions, but they don't know how to invest. That's why they need someone who is very famous, who has a very large record. He was working for a big broker. It means someone they can rely on him. And he took their money. Okay, he took their money, and later it was just a scam. But 80 billion, it's a lot of money. You see how people are prepared to throw their money? Okay? So, you see how people, they are hypnotized by these guys on TV, on Facebook, on Twitter, or wherever they are, or some websites, okay? They are hypnotized. Now, since we are speaking about penny stocks, when we say manipulation, it means it is not a normal trading. It's not you see a stock according to your strategy, or you hear the news, or you have speculation, or you study the company and you know something good, so you want to trade or invest. This is normal. But what I'm talking about is not normal. What I'm talking about is people who they have a large people who follow them, okay? And they pretend they know something. They pretend they know the future, how the stock will double, okay, or triple. And sometimes, because they manipulate, you can see it. And when you see it, you believe more because you don't know trading. If tomorrow he tells you, oh, this stock will be doubling. It's $1. Tomorrow you will see $2. It's true, because there is manipulation. He knows he has 100,000 or 1 million subscribers, or I don't know how many people he has. He just tell them a stock, and this stock will fly, especially when it is penny stock, small. He can't show them Facebook, okay? These guys, he can't show them Facebook or Google or Tesla or Amazon or big stocks, because he can't manipulate these stocks. These stocks needs 100, 200 billion, 300 billion a day in order to move these kind of stocks, to move them a little bit more. And if you go, for example, to Tesla or Facebook or Apple, you find, for example, 50 million, you find 100 million shares traded a day. But these are big traders, and the whole world is trading them. But they can't be manipulators. They can't. You can't go and manipulate Facebook, for example. Okay? So this is just an idea to show you that these kind of people, they don't manipulate known bigger stocks. Okay? Because if something happened in the big stocks, they should the guys who are watching the big stocks, they should know who moved this stock. Is it an insider selling millions of shares, or is it a new investor who bought a big chunk from the public? He buys a lot because he knows something about the company, or it is just a speculation. Okay? But penny stocks, I will tell you something. In order to describe these stocks, because a lot of people, they don't differentiate between these two kinds of penny stocks I'm telling you. Now, hello Jesse Smith, hello Joe. Guys, I will answer all your questions. So after 1 hour, after I finish my description, and then I will come you back. Okay? So stay tuned. Be patient, guys. So, as I told you, these penny stocks, NASA, thank you very much for coming. These penny stocks, we say $5 and under. It could be 2, it could be 4, it could be 1, it could be 50 cents, could be 5 cents. Okay? And since we are speaking about manipulation, most of these stocks, most of them, you find them IPOs. IPOs, it means they just begin with 50 cents, $1, $2. It's not a big deal. And you find them, sometimes they have no volume. Because when we, in our trading portfolio that we have in my subscription, we have a lot of stocks like this. We have big one, we have small one, But the way I trade for a trend. Stocks that have volume, these stocks are known. IPOs are not IPOs. But the other ones, I showed in my search, I showed this kind of stocks, and they say do not trade this kind of stocks because these stocks can be manipulated, and you see manipulation. I showed the manipulation. For example, today there is no volume. The stock is $5. Okay? Tomorrow, either it goes up to from $1, for example, or let's say it is $2. Tomorrow, it goes to $4 without any reason. The other day, it will go down 50% or 70% or 80%. So you understand the game? It means from where these people come. If the stock, you see it, there is no volume. How come the next day, traders, they come, they know about the stock? It means that this is manipulated. There is a scam going on in this stock. And most of these people, they do one scam and they forgot about the stock. They will go to another stock that has no scams before. I can show you a lot of these stocks that goes and flies like this up, they fly down. Some people, they can make a little money, some money. Some one time they lose all their money. Okay? So it's not a regular trading that I'm speaking about. So these kind of penny stocks are manipulated. They are related to scams. They can go into a very high percentage. But for me, since I don't follow these stocks, because you need, if you want just to know them without anything, you should scan in the morning at 9:30 for this kind of stocks by volume, because the volume and the price, most of the time they go together. In the morning, you see a stock that has 10,000 volume a day, and at 9:30 in the morning, you see it goes to 1 million. Just it opens it up to 1 million. It means there is something. And this has nothing to do with fundamentals. It means it has nothing to do with the company earning news or something. No, because sometimes you find manipulation occurs many times. Okay? Now, let's go now to the second penny stock. These penny stocks, this kind that I am following and that I show in my subscription portfolio, we have a stock now that it is 210%. Okay? 210%. It means if you put $2,000, you get 4,000 profits. 4,100 on this Friday. Now, I show it to them, this stock. We say we follow this stock. It goes up. It makes the 100 in a few days. It goes down a little bit. I sold some shares. Then it goes up more and more. And tomorrow, if God wills, I will see. If this stock continues, I will try to see when I exit this stock. If it goes down, I sold all my shares. It's good to get 100% or 200% in the stock. These the stocks that I am following when the stocks are penny stocks. Because a lot of people, they say to me, oh Karim, We need you to buy different kind of stocks. We see how things work with big stocks, with smaller stocks. Okay? So that's why my portfolio is always a mixture of big stocks. We have stocks that are $800. We have a stock that it is 200. We have 300. We have 100. We have 50. We have 20. We have 4. We have 2. $2. Okay? So it is just to show you that you can make money with high percentage in many kinds of stocks, not just penny stocks. Okay? Now, hello Bassan, thank you very much for coming. So, a high percentage, there are some stocks that, for me, what I like are the stocks that have a trend. Now, when the stock moves very, very fast, it doesn't mean that you should stay 6 months or 5 months or 8 months in order to get 100%. No. For me, I don't see the time. I don't care about the time. I only care when the stock stops giving money, and then when it doesn't give me money, I exit. If it gives me more money, I will buy more sometimes. So you understand? So to get high, how now to get high percentage of stocks? First, to get high percentage of stocks profits, you should follow the trend. This is the most sure way to make money. Now, forget about gap ups and gap down and the other stuff. Because gap up or gap down, it is because of the earning news. And this, it's more gambling than trading. Okay? It's more gambling than trading. So you understand that. Don't tell me because there is one guy who is telling me, oh, it is because of this, oh, the stock will have a gap down because of the earning, because of the... I say, man, listen. You should not predict the earning news because the news is with the company. So try not to waste your time predicting. If you want to stay and you bear the responsibility of the earning news, if you want to bear and stay, understand that you can make high percentage in one day. Tomorrow you will have a gap up and you will make a lot of money. But understand that if things go wrong, you will have a gap down and you lose a lot of money. So that's it. So it's a matter of risk. It's not a matter of predicting. Thank you, NASA. Okay. It says the stock was 27.24 on March 20. Now it is 171. Wow. It looks like 600%. Yes. And this is not a penny stock. It's only $24. NASA, we will check all these when I finish my description, and then we can go and explain. Okay? Now, to continue my description, is that the best way to make money with high percentage is when there is a trend. Now the trend, understand that no one knows how long it will be and how much you get. For me, when I buy a stock, I don't care how much it will give me because I don't know. So how you know how much in terms of percentage and in terms of time? No one knows. A stock in 1 week, it can double. Okay? It can double in 1 week. But you find another stock, the same price, it doubled in 6 months. But both ways, it's good that you get this 100%. So stop focusing on the percentage and on time. These are two things that you should not think about because you can't control. Okay? Now, what is the most important thing you can do? What is it? You should have skills to select the best stocks and to manage them well. Another skill is to manage the stock well. 2 skills that you need. So this you can control because the more you trade, the more you see stocks, the more you know better. That's why you need many years to stay in trading. You don't trade few months or 1 year and then you quit and you say, oh, it's all Wall Street guys, they stole our money, it's Illuminati, it is globalization, it is the 10 families rich in the world, they take all our money. You know, they begin, when they lose money, they don't know how to get money from the market. They come and they complain. They complain because they don't know how to trade. But other people's, they trade, they make money, and they are happy. So the difference between them, some knows, some they don't know. That's it. It's business. It's business. You see 2 restaurants. One, you see a lot of people, they come, they have a lot of customers, they do a big business, and the others, they don't. Okay? So it's the expertise, it's the know-how. The know-how is something that it's skills. You should learn these skills. They don't come just like this. You watch a video online about someone and you get the skill. No, you should practice. You should practice. Okay? It's not you watch how to do an operation on the brain and then they give you a white blouse, you enter and you try to do operation in the brain of someone. Okay? And you say, I know because I have watched the movie or I watched the video how to do it. It's very easy. Okay? So you need to practice. So Ramin Alazov, you speak about options. Listen, Ramin, now I am speaking about stocks. I'm not speaking about options. Options, it's another risk. Okay? Options, you have the strike, you have the time, and it is risky by itself because you are risking 100% of your money. So you are dealing with a very high risk thing. When you make money, you see that you make money, but when you lose, you will lose a lot. And that's why options are for more advanced students. Okay? You can do them, whatever. But when you are doing with $10, $70, $50, you think this is money. But people who are doing options, they don't do $10 and $50. They put $10,000, $20,000 in a contract, buying a lot of contracts or so in one stock. It means they have a higher risk. Okay, but focus, Ramin Alazov, in this thing. I'm just speaking about stocks. So when I finish, I can give you more about options. So let me go now to show you, to show you what we focus on and what, because you can control. There are other things that you can't control. So don't focus for them because you don't know. So let's go and check the paint. Let's see here. Okay. Let's see the paint here. Now, I will give you two different stocks, okay, that we have spoken about them. Okay, so let's say we have $2 stock, which is penny stock, and we have a $2 stock. I will give you two kind of charts, and you see both this, and you can analyze them. So you find a chart like this, okay, like this, okay, and then you find like this, okay. Now let's go again. The stock here is $2. Now the daily volume, all here, the daily volume is 50K, 50,000 shares traded a day in all these. In all these days, this is the daily. Okay? Now, in this day, the stock goes from $2, let's say it goes to $4. Here, today it's $4. Now the next day, it goes down, let's say here, $2.50. Because the people, they bought a lot the next day, there is no going up, so the people, they begin to sell. The good people, they sell here on the first day, they finish, they sell, but other people, they stay, and those who don't know, they lose all their money. And then it continue like this here with $2, and the volume is 50K, the same, but in the day here, in this day, the volume goes from 50,000 a day, it goes, for example, to 10 million. 10 million. Now ask yourself, who brought these people who bought 10 million in this candlestick, in this day only? Okay, this day. Who? This is what we call a scam, or we call it manipulation. Okay. Now, this in general, for me, I don't trade those. I don't. Okay, because you will never know when it goes up, when it goes down. So I don't do that. Second one is another one, which is $2. It goes down, it goes up, it goes up. $4. Let's say 1 month. Okay? So here it is the same result from 2 to 4, which is an uptrend. So this is what we are looking for. We are looking for stocks that have a trend. It could be 1 month or 2 months or 6 months or a few days. It doesn't matter. This is what I'm speaking about, and this is what this is what we do. Okay, in our portfolio, we have a stock that goes 210%. In this Friday, it was 210. I don't know on Friday, in Monday, tomorrow, it goes up or it goes down. I don't know. But now we are at 210%. I think we stayed 1 month or two. I am not sure when I bought it. But in the subscription, you can find the day when we bought it. And you will see the trend going up. And you will see the money. Okay? So this is in general something that I just showed to you. This difference between two stocks and the stocks, the penny stocks that are manipulated, that we have a scam, and the other stocks that have a trend. And this is what we follow, and this is what I do in my subscription portfolio. Okay? Now, we have some time. We have about 19 minutes. I will finish my explanation. Now, let's go back again to the explanation, and let's explain to you things that you should do. Okay? So we said here 2 skills. 2 skills that you should acquire, and okay, 2 skills that you should acquire, and we say here let's see here, 2 things you should not focus on. Okay, now this is just I will just explain this to make it clear for you guys. Now, 2 skills that you should acquire are, okay, 1 is stock selection, and second, managing the stock. Okay, I will explain those right now. 2 things that you should not focus on are the time, and second is the percentage that you get, percentage of profits. Okay, now let's explain this. So, stock selection, the first one, stock selection, the first one, it means the criteria that you use. The criteria that you use. Okay? You should practice this criteria until you are good at them. And stock selection means to know kinds of stocks. Kinds of stocks, to know them. Now, I give you an example. To know the kinds of stocks, it means that sectors, industries are not the same. Okay? They are not the same. For example, drugs companies are not the same as drugs companies are not the same as financial companies, financial stocks like banks, like the other stuff. Okay? So you should, by buying a lot of stocks during the year for many years, you begin to distinguish between these kind of stocks, and you understand which are the stocks that go fast, which are stocks that are going slow. Okay? Now here, I'm not speaking about penny stocks. I'm speaking about big stocks. $10, $20, $200, $1,000, $2,000. I'm speaking about bigger stocks here. Okay? The second thing you should acquire as a skill is managing the stock. Some people, the stock goes few days. I see people, they do what? Someone talks to me about price target. Price target. I say, why you use this price target? Oh, he told me, okay, someone told me when you get 10%, exit, because the stock will go down and you lose this 10%. This is nonsense. And these people who teach you to exit at any price, they are wrong. They are wrong because you will never know where the stock will go. How do you know? How do you know this stock goes to 10% and go down? What if it goes to 100? Okay? If you cut your profit on 10%, it means you will never see 100%. You will never see 20%. You will never see 200%. You will never see 500 or 600% as the stock that we see that NASA has showed to us. Okay? So managing the stock, it means how you deal with the stock. Some people, because they don't know how to deal with the stock, they exit early. Although they make 10% or 5% or 20%, but they miss the big game. They miss the 100, 200% or 600% or 1000%. They miss the game. The rule for me is I will never exit until I see the stock doesn't go no more. When the stock stop giving you money, it's that time that you exit a stock. Okay? So these are the two skills you should acquire. Now we go to the other side. Two things you should not focus on. Time. Okay? Now, here is a stock. It goes. Okay? I have a stock before that you find it in I think in training level, the last training they have in videos, training level 20. I have my trades. I show you a stock that we stayed 5 months. Okay? So don't focus on time, because for me, I will never know that this stock stays 5 months from the beginning to the end, and then the trend collapse. Okay? So we have made that percentage. So the percentage here, you should not focus on it because you will never know. You can have 10%, you can have 20, you can have 100. You can have 200, you can have 600, you can have whatever. And this 5 months, you can have it in 1 month, you can have it in 1 week, you can have it in 2 weeks, 2 months. So don't focus on time and on the percentage, because you can't control them. You will never know where the stock is going or how much money you make. But the only thing you focus is follow the trend until it stops. Now, there are techniques I show in my training and I do with my stocks. When I show this technique, I sell my stock, whatever is the thing. I don't predict the time, I don't predict the percentage, I don't care. What I care about is I manage, here is the thing, I manage the stock well. This is what I do. How much I make? I don't know. How much time it took me? I don't know. Because I am not paying anything. It's not like option. And here I go with Ramin, a question about options. Okay? Now, as you know me, I always, when I have you guys, when you ask questions, I begin with the first question and then I go down. So Ramin, he spoke about options, but he was with the later guys. So I will do the thing later. Okay? So, guys, now, it's 52 minutes. I nearly finished right now. So, guys, the conclusion that I give you from this presentation is that there is something goes with high percentage. Okay? Some people, they do high risk. But for us, we try to minimize the risk and maximize the profits. Okay? And this is what I do in all my stocks. Try, if a stock is a loser. Not you are a loser. It is your stock. It is your trade. A trade, try to think of this trade as a bet. You bet on the stock. Okay? Let's say you lose. It's okay, because losing some trades is part of the game. If someone tells you I don't lose, all my trades are up, and this is false, and he is the biggest liar on earth, in the stock market and on earth. All the people lose little money, but the only difference between a professional trader and a beginner is that professional trader, he knows when to exit exactly. He doesn't wait to exit when the trade is not good. The problem with beginners, they begin to hope because they lose some money. For example, someone does a trade, then the stock after 1 day or 2 it goes down, he loses 10%, 15%, 20%. And then he becomes scared that you lose 10% or 20%. And he wants his money back. No, I'm not selling. If I don't sell, I don't lose. This someone has sent me an email and he told me this. If I don't sell, I don't lose. I say, okay. So, you bought a stock at $10. Okay? Now you are at $2. You lose 80% of your money, and you are telling me you are not loser until you sell? This is the kind of students or the kind of beginners that they are overwhelmed with their feelings. They don't differentiate between a business and hopes. Trading is a business. You should be firm. When something doesn't work, okay, you sell the stock, buy another one. That's it. So stocks for you are just means to make the money. You have some stocks or few stocks that you lose. This is part of the game. Okay, this is part of the game, so you should understand that. It's not bad when you lose a stock or you lose a trade. You can lose a lot. But the ones that you make money, you should make money. Okay? So, this is the thing. You should always focus on what is right. Don't focus on hopes. Because when the stock goes down, you hope that the stock will come back. But what if it doesn't come back? You begin to lose more and more. For example, I will give you just this. This is the last thing I explain before we go to your questions, guys. Okay, here is two things I will show you. I always do in my subscription when I use trades. Okay, so you have a stock here. It goes up few days. Okay, let's say it is 20. It goes to 21.50. You are happy. You buy, for example, 100 shares. You are making $150 just in one day or two. You put, because it's 220, you put $2,000 buying 100 shares of this stock. And this stock is called XYZ. This is just a fake name. I don't know if it's a stock or not. So this is the thing in one day or two. And then your stock collapses. Now it's 19. Now 19 from 20, you have lost $100. Just an example, okay? This is what you lose. Now, a professional trader, he already knows where he should exit. Let's say he exits at 19. So, professional trader, he is out with this loss. Does he lose? Yes. So, I'm telling you, if someone tells you that he knows how to trade and he doesn't lose, he is the biggest liar on earth. He just lies in order to make sure that you are still hypnotized. Okay? Now, what's the beginner do? What's the beginner do? 19, he said, oh, I lost 100. Let's tomorrow or after tomorrow the stock will come back, and because I lost $100, I don't want to lose. I was making 150. Then this 150 is gone. The profit is gone. And then I lose with my money, I lose 100. It's too bad. I should wait and see. Now, next day, it goes to 17. How much he lose? He lose 300. So the money becomes bigger. He stays. Now he lose, it's 15. He stays. He lose $500. Or 25% of his money. He already lost. And then one time, he gets angry and he sell because he see that he is a loser. He himself is a loser. He sold. So, between the professional trader who lost 100 and maybe he bought another trade, another stock, and he is up 200 plus, You see that this guy is staying more and more and more, and he lost 500. Then he do another trade, he do the same until he lost all his money. Now, another example when the stock is moving up. So the stock is here, it is $20. Okay? The stock goes to $22, and then it goes to $21. See that? Now, what does a professional do? A professional trader, he will not just exit because the stock have a correction. This is called a correction. It happens always. It is a correction. You should not sell because of the correction. And then what will happen with the beginner? The beginner, he makes here $200, and then he see that the stock goes to 121. He lost 100 from his profit. So he said to himself, I am making $100. Why should I stay? It might go down, down, down. I lose it. So he exits with $100. He is happy with that. Now, a professional trader, he stays, it goes to 25, it goes down, he stays, it is now 30. So from 20 to 30, he makes 50%. Okay? 50% from his money. So he is making $1,000, and then he exit. This guy has made $100. He is a beginner. Okay, so this is professional. This is why beginners, they always are losers, because they don't know how to trade. They have no strategy. They are not firm. They have no idea how to manage the stock. That's why they are losers. Okay? So these are just things that I want to share with you guys. Now it is 1 hour. I will stop my explanation because I have finished. Now let's drink some coffee and go to your questions. Okay. Pablo, hola, hola, hola. Saba, hello. Shikar, hello. Fabian, hello. Karim, hello. Duna, hi teacher. Shikar Sood. If we use options on large cap stocks, we can get good percentage. Can we get a good percentage? Now, I have just explained that percentage can be with any stock. Okay? But mostly stocks that are fast, mostly are technology stocks, drug stocks. But there are exceptions to this rule. So this is not a rule. Sometimes you find financials and you find good stocks, credit cards or so. Where I have seen a credit card before, it's called Square. I don't know now how much it is, but it goes from $10 to $100 in a few months. 1,000%. So you will never know. So, but large caps, most of the large caps are heavy. So if you want faster stocks within those large caps, you should maybe go to healthcare stocks or technology stocks that are better. But this is not a rule, but this is in general. That's why people, when they want to make a lot of money, they go to this kind of stocks. Top series, hello Karim from Boston. Hello man from Boston. Abir Khan, good morning. Abir from Sydney. Oh, Sydney. I like Australia. I have seen a lot of videos about those who pan for gold. You know, the small nuggets of gold they find in the desert. This is I should find a friend there and I should search for gold. This is what I want to do when I have time. If you know someone who goes there, let me know, Abir. Thank you very much, Abir. I know you are in Sydney, you are not in the desert, but maybe you know a friend who has land, it has gold. I want to search for gold. Adolfo De Real, hello from Texas. Oh, hello from Texas. Thank you very much for coming. It's the place for cowboys. A lot of meat, a lot of fun there, I guess. A lot of heat also. That's good. Duna, gas prices are increasing at the gas station. Should we invest in the energy sector? So, Duna, here when we say, are you speaking about trading or investing? I don't understand. If you are seeking, for example, to invest because it is an opportunity, because all the stocks of what is it called? Energy sector have collapsed and now they are going up. It's a good time for investors to buy more. Yes, but you understand that for me, I am a trader. I don't buy and then if the stock goes down, I keep it because I invest. I don't do that. I need my stocks when I buy to go up. If they go down, bye-bye. Bye-bye stocks. I don't want you. I will go with another one. But since you speak about energy, I have spoken about energy stocks like 2 weeks or 3 weeks or 6 weeks ago when we have the downtrend. Let me see now how the energy sector are. Let's see. Let's see the energy sector. Let's see the energy. I will see the indexes and I will let you know if so. Here is the energy sector. So when you click that energy, it will give you the 6 industries and we check the index and we see. Okay. Let's these are stocks. It means some stocks are bigger than the indexes. So let's I don't see any what are the indexes? Oh, we have here one. Okay, look. Energy in oil and gas pipeline. See? They do the same as the market. Oil and gas pipeline. Now let's compare it to Dow Jones. Okay, look. Dow Jones are doing better than energy sector here, which is the oil and gas industry. What does it mean? It means if you have bought the ETF for our market, is doing better than this one. Let's see another one. Oil and gas drilling and exploration, it's doing worse. Major integrated oil and gas industry is doing bad. It's going bad. So in 1 month or so, it's not doing anything. But the market is going up. But this is not doing anything. So oil and gas refining and marketing industry is going worse than the Dow Jones, but it's going up. Now, let's see some stocks. Now, Contago Oil and Gas, which is a stock, okay, it was doing better than the Dow Jones before. When we have the collapse, now it's doing better than Dow Jones. What does it mean? Okay, and it is $2.75. Oh, they have changed it. I think we begin with the small. Yes. Because I have some criteria that it is not good. So we begin with these are the. Let's begin with the most expensive. We find here the indexes first, and then we go to the stocks. So it's doing worse, but it's going to. It's doing worse. So all these are doing worse. So let's take a stock that it is big, like this one. It's doing nearly the same. It's just little better than Dow Jones. CEO is doing worse. CVX, Chevron is doing worse. This Philips 66 is doing worse a long time ago. I have explained this last time. So this is where the Dow Jones is. Okay, this is Dow Jones on the white line, and this is where the stock. So what does it mean? It means that this stock is doing worse than Dow Jones, but it's going up. Okay, it's going up. I don't say it's not going up. It is going up. Like this stock, PNRG, it's not good in any. It is bad. It is so bad. Goes up, goes down. It is so bad. It's going up a little bit. Let's see if I find a stock that it is better than the Dow Jones. That one is too bad. I don't know, Duna, I don't know why you choose the worst sector in the whole market. You choose it and you want to invest in it. I don't know why. You shouldn't think like this. Okay. So this stock, Renewable Energy Group, is doing way better than the Dow Jones. This is one that I found. Only this one, I don't know. So I would not go to all the stocks, but they are going up, but they are not like the market. Okay, let's go back to your questions. Ramin Alazov, hi Kareem. Rahmatullah, hello Kareem. Duna, SpaceX. So, what do you mean by SpaceX? Is it a stock? Oh, we will see later. Please do not tell me what is it. SpaceX. Top 30 said, what is one trading investing book that has helped you become a better trader at the beginning? Now, trading, the best book I have read in trading, I have read a lot. But the one with literature, it means it is a novel. I have showed this book before. I forgot the name. When I remember the name, I will let you know. It's about Jesse Livermore, one of the best traders in America in the 20th century. He was the one who short the market in 1929, and he made millions of dollars at that time, where most of the people, they lost all their wealth. He is one of the best traders in the world. That's one. I read his, someone has written a book, a novel about his life, but it was just a novel, but it makes me feel happy that someone, when he was a child, he was like 15, 16, and he began to work with a broker, and he began to see the price. He's just changing the price, and he get a strategy, and he began with his strategy with the price without being knowledgeable or his studies with other people, just by himself. This is my first impression. This book, I could read it 1 time, 2 times, 3 times, and it is not a book of trading. It means they show you how to trade, but they show you motivation. Okay, they show you motivation. But I have read later a lot of books, but later when I read about them, I don't agree with what they say. I don't agree with them, so I just read. Okay, so I read what they said, but for me, what I read, when I check it, it doesn't work, and they are wrong, so I just forget about them. But top series, what I ask you to do is, it is good to read. If you have strategies, you have techniques, apply them and see. But you should know why to use it. He should give you a reason, not just apply this and you will succeed. No. This will never work. But I understand later that trading stocks, you should be disciplined. You should have rules. You should not break your rules. When you buy a stock at 20, you say at 19 you will exit. At 19 it goes there, you exit. You don't stay, I will stay tomorrow and see where the stock will be. No. So there are techniques, there are skills that you should acquire, but you need time. You need to trade. Don't be scared to lose money, because losing money is part of the game. If you don't want to lose, don't do trading. Do just a job. You work 1 hour, they give you the value of 1 hour, $10 or $15 or $20 or $60 or $100, whatever they give you. This is because you work 1 hour. Or you work by salary. You work 60 hours or 70 or 80 hours and they give you $2,000 or $3,000 or $5,000. Okay? Salary. That is when you don't want to have a risk in your life. When you don't risk in your life, you will be poor. Except when you have a very good job, and you have saved a lot of money and you have invested a lot of money. This is how you succeed if you don't want to venture into business. People who do business, they risk a lot, but when they succeed, they make a lot. But people, they don't want to risk their money and they want to make a lot. This is impossible. So you should have what we call the mindset. So the books helps you understand each one with his idea, and you get all the ideas and you get a better knowledge and you practice. And then you can have your own rules. You don't apply anyone's rules. You should make your own rules in trading or investing. After a few years, if you succeed, that's the good thing. You don't worry about all others what they do. You just do what you are going to do because you are making money. Jesse Smith say, so I was wondering what you think about Tesla prospects for quarter 4. Oh, let's see. Jesse Smith, I think you are new here. I don't predict something that it is unknown. Do you know who makes the prospects? It is the analyst. The analysts, they see what's going on in the market. They see how is the businesses, other businesses, and try to come up with a price, with EPS, which is earning per share. Okay, earning per share. This is for the company, not for us, because for us they don't give this earning to us. They give it just virtually how the company is doing. So for me, I don't predict what the company is doing because I don't do investing here. I'm doing trading. Now if you think you outsmart the market, you say, for example, oh, I think Tesla will be the good, so there is a gap up. So here you are predicting. Anyone can predict. Someone said, for example, your friend said, no, Tesla will be bad this quarter because of Corona or because of something, coronavirus. Or you, for example, you said, no, I think that it sells a lot of stuff and okay. But the result could be a gap up. You could be a winner, or him, he could be a winner because the market goes down and he short the stock. So this is a prediction. And in trading, we don't use prediction to make money. You are wrong. If you think you can make money in the future predicting, I'm telling you from now that you will lose. When you lose, you can lose a lot of money. So we don't predict. I should see the price. So when the earning news comes, it's a big risk. Either you stay, or you buy half of your shares, or you leave a few shares, or you sell all your shares before the earning. So it's a big responsibility of your money. Do whatever you like. If you stay, and next day there is a gap down, you lose 20% or 10% or 30%, it's your fault. If you make 10% or 20%, you are doing good to trade, but this is like more gambling than trading. So for me, I don't predict, I don't gamble. I don't. Ramin Alazov said, right now people are more smarter than trust people like Madoff, and regulations are more tight. Yes, Ramin Alazov, you said the people are more smarter. Where have you seen this? Where have you seen this? People are more smarter. I have seen people who said, who has 100,000 or 200,000 subscriber, and he said them, give me $100, I make it to 100,000 in a month. People have greed. They are beginners. They don't have money. They go to the most difficult thing, like options, futures. They want money. With little money, they want bigger money, and they think they can make it. This is greed. If you are not a professional trader, you have traded for many years, you know everything about trading, you should not do that. Greed kills beginners. And they say, penny stocks are just small stocks. As if you lose 50%, It doesn't mean 50% of your money. Whatever is your money, even if you put $1,000, if you lose 50%, it means you have lost 50% of your money. That's it. Either you have 10,000 or you have 1,000 or 100,000 is the same thing. You have lost 50% of your money. So the best way is not to go to risky trades without skills. You should have less risk when you begin trading until you become a good trader and you have efficient strategies and techniques, and then you can do more dangerous trades because you know the outcome. If it is bad, you should know that. For example, for me, let's say I bought let's say I bought 100 shares of Tesla, $80,000 or $90,000. I bought 100 shares, for example. Okay, there is the earning news. If I stay through the earning news, what does it mean? It means I am going to gamble with all this $90,000 or $80,000 buying 100 shares. I am going to gamble because if I have a gap down, I lose 20 or 30% or 50%. You will never know how much you lose. So all this money that you lose, you lost it. So you should know what you are doing and what is the thing that it is facing you. Don't play the fool. The market punish the recklessness people. The people who are reckless, the people who are not firm, the people who are not serious about their trades, the people who don't know the risk, the market will punish them. When they punish you hard. That's why a lot of people, they lose all their money trying what? Risky trades always, and they don't know the outcome. Okay, they predict, I have 70 or 80 or 90% success. I did it last time, but last time it doesn't mean that you succeed in one trade. Next trade you will do the same. When you do thousands of trades and you win a lot of wins and you make money, that is the way you can put too much money and you are serious to make money because your strategy works. Not just you think I have an idea. These ideas, all the beginners try thousands and thousands of ideas. The idea is because it comes. What if I do this? What if I pre-market I buy this option or this stock? I bought it. I see at 9:30 what will happen. This is not strategy. This is just what we call hit and miss strategy. It is used by all beginners. It means when you are trading, you are just throwing your money, thinking or hoping that the market will be with you. It means you ask for charity from the market. And I'm telling you, Wall Street adage, there is no free lunch on the market. There is none. If you do mistake, you will pay. Sometimes you will pay a lot. And I'm telling you, especially in earning news, some people, they go bankrupt. They lose all their money. Whatever your money you have. I'm telling you, if you have even 100,000, you put it in a stock, tomorrow it goes down with 50%, you have lost 50,000. This is serious, okay? For regulations are more tight. No. Even now, the regulations are more tight. Scammers, they do their scams. In penny stocks, I showed you. I will show you stocks that have manipulations. Okay? but the regulations doesn't reach them, because it's just online thing. Joe said, How to Trade in Stocks from Jesse Livermore is a great book. Yes, this book he has made is a very tiny book, and there are a lot of writings, and some people, they want to make a strategy, and they buy books like this in order to make money. Okay? But it doesn't work. He died with his secrets. This guy is a genius, and he did not teach people. He just make. I think when he died, I think he killed himself or suicide or something. In his bank account, in the 50s, 1950s, I think 54 or something, he left $100 million in his account. 100 million with a guy that he was 16 or 17. He began with zero money, because even when he began to trade, he has a friend, he began with the trade with $3.50. He asked himself to help him. He asked a friend to help him, and he told him, I have a sure strategy. I can make money. And his friend believed him, and when he began to trade from $3, he made $10 or $15 or $20 in a few days. He was day trading. And his mama or his mom told him, you should just work in that broker thing. Do not gamble. He told her, Mom, I am not gambling. I am doing some business and I succeed. She told him, no, you are gambling. Because at that time, people who do stocks, most of them are gamblers, and they lose a lot of money because they don't know. They just hear noise here, something here. They hear someone tells them to do this. They can buy and use from a company secretly. Yes, they do a lot of things at that time. Before the Security Exchange Commission in 1934, they put rules about this stuff. Okay? But it is good, guys. It is good. Whenever books you find about trading, just read. Try to see, maybe his strategy is working for you. Try. Okay? But reading makes your mind open to other techniques, to other strategies. So you should not close your mind from techniques. Okay? You should just open your mind. Maybe you find another technique that it is better, another strategy that it is better. Whatever thing. Joe said, another great book is called Truth of the Stock Tape from William D. Gann. Is it the guy who made the indicator, this Gann indicator? Is it he? Is it this guy? So I didn't read that book, but it's a very good thing. I check it in the future if I have time. If I find it, I will buy it and I will read it. Yeah, it's good. It's good to always read books, to refresh your mind, which is very good. NASA said, hello teacher, did you bought Wayfair stock symbol W 700 in 2 months? No, I didn't. And you told me it's called the Wayfair stock W. Let me see this stock. I think this stock, I think I have showed it before, because I made these two lines at that time. Before this here, yes, it goes with the market. Okay, so if you can take this here, this is where the market dips. Dow Jones go a little bit up, but this stock has gone wild. It goes here to 197 from yes, from 27. If you see everything, but I have shown this stock. I don't know where, but when I put these two lines, it means I have seen this stock before, but I didn't buy it because I bought other stocks. I didn't see that one. I didn't see it. But as I told you, you will never know which is in terms of okay. See that? So bad. It was bad before, and it has made you see it has made here a trend from 80, it goes to 170. It means 100% in 1 month or so. But this time, but understand that it goes with Dow Jones, with all the stocks when they move. So it does the same as them. But this is what I am speaking about. You will never know how much it will go. Each stock is different. Okay? Almost all the stocks are like these, but the percentage, one is going 10%, one 50%, one 30%. Although you see the trend, but this one is so good. Okay, it's so good. If we accept this one, 197, yes, it's too much. Thank you, Nasa, for your thing. Ramin Alazov said, you said don't look at time. If I buy options, I have to watch the time value. Okay, Ramin or Rabin Alazov, here we are speaking about stocks. So let's give you some ideas. I know you are doing a lot of so now when we speak about options, okay, so here you buy the time. So you buy the time. Let's say this time it's 1 month from now. Let's say it's this is the first day, 4 weeks, this is the month. This is, you buy the time, and you can the option can have a value if it is in the money, or if it is at the money, it has a value. It means the option, when you buy it, it will be more expensive than if it is out of the money. Okay, out of the money, your option has no value. Okay, so this I know you understand. So the problem in options, first you should buy the time. In stocks, you don't buy the time, so you avoid buying things. It means buying time, it means as if you are renting. You are renting to stay. That's why we say buying time. The value exchange in the future, if your options is hitting your stock price. So, since we are doing stocks, we don't buy the time. But when you are in an option, the expiration date is very, very important. Expiration date is very important. That's why, because you pay money, you should pay attention to it. But our session, we are speaking about stocks. So yes, in options, you should take care about your expiration month, because you pay. It's like when you watch a movie. When you watch a movie, let's say the movie is 2 hours, so you are watching 2 hours in order to see the events of the movie. Your benefit is to have fun. So you pay for these 2 hours, and this is what we call to buy time or renting time. And the value of your option, if the stock is going up, you will be making money. If it's going down, you lose money. But understand that options is called, for those who don't know, still they don't know, it's called a derivative. Okay, sorry for the handwriting. So derivative, what does it mean? It means that you control big money with small money. This is what we call derivatives. And from here, this small money, whatever you put, you are at risk, 100% risk. Okay? And they say, this is, I am not sure about, they say 65% of options are worthless always. Worthless, it means people, they lose their money, all their money they put. And this is billions of dollars. It's not hundreds of dollars, it's billions of dollars. Because people, they do options a lot. They think it's easy. Because you put small money, but small money, if you lose 50% or you lose 100%, you lose all your money. Even if it is small money, you lose it. And you put another small money, you lose it. You put small money, you lose it. So this is why it is dangerous. So you go to options if you have finished doing stocks. If you know stocks very well and you make money in them, you can go to the more difficult thing, which is options. You don't begin with options and go to stocks, because when you begin with options, most of the time you lose money. So this is just my suggestion. I know some people, they do whatever they want. Saba said, this happened to me. Thanks a lot. You are right 100%. Thank you very much. Joe said, it's good to buy at 50% mark. I don't know what's this mark. I don't know what do you mean, because when I am speaking, I'm doing the lesson. But you ask me the question when I'm doing the lesson. So what is it, this 50% to buy at 50% mark? What does it mean, mark? And what is it that you buy at 50%? Do you agree? I don't know what you are talking about. You should explain to me what's this and what's this 50% mark, and then I can explain. Basan told, don't forget, I told you many times, I am from Texas. too and have lots of good real estate. Yes. Now listen, Basan, I know about real estate, but I don't know that you have cows also. Do you have also cows and a farm? Because you are into real estate, I think that maybe you have a farm or two. Okay, I like the old days. If you have a revolver, I can come to you. We can play some Western movies there. Okay. Thank you, Basan, for coming. Ramin Alazov, what do you think about day trading strategy? I start to see a lot of videos posted about trading S&P 500 stocks and following SP in 5-minute candlesticks as direction indicator for scalpers. Now listen. You know, go online, go in books, you find thousands of strategies and techniques. When you scalp, most of the people, they forget about scalping because it's not used anymore. You think when the short time is less, you can make money better than someone who stays more. Now, in my opinion, this guy, Jesse Livermore, before, he was day trading for years. He made a lot of money. And then he discovered swing trading. He stopped day trading. Why? Because he sees stocks that are 15, it goes to 60 in a few days or few weeks. Why he leave from 15 to go to $60 in a few weeks? He leave it for working each day for 2% or 1% or 5%. Sometimes he loses, sometimes he doesn't. So most of the people change from day trading to swing trading because you have more time to get all the money of the day. Because if the day you get 2%, let's say the day the stock goes 5%, you are not going to take 5% from the stock because you don't know the beginning, the first beginning and the first end. You don't. So you are taking less. For example, if the stock has gone 5%, you can take 4, you can take 3%, 2%, 1%, whatever is your percentage, but it should be less than the day. In swing trading, you get all the 5%. If it goes 10%, you get it all. You stay 1 month or 2, you get the big chunk of profits. This you will never see in day trading. Okay? Exceptionally when you do penny stocks and you follow this scams, and you are always doing penny stocks, following these scams, and you are in the morning and you check the volume and you see. But this is a very, very hard work. So why you do a hard work and you lose a lot and you leave making money easily? I'm not saying without risk. There is always risk, but it is easily. For us in our subscription, we buy the stocks. I'm telling you that some stocks we have 3 months. I didn't sell. Now you ask me why. The stocks are going up. Why should I sell? You see that? We make money because the stocks are going up. This is what we are following as. And you are going to the smallest, and you see, and you told me a lot of videos posted with scalping. Good luck with it. I'm telling you, good luck. Try, maybe you can make money. It's very good. But for me, you are like doing what? You are going like doing like fishing with one hook, and you throw it and you wait. Sometimes you get small fish, sometimes you get big fish. But we, in swing trading, your portfolio is like a net. You throw it in the sea and you got a lot of fish at the same time. That's what we do. Okay? So, but if you succeed, it's good for you. It means if you scalp, but understand that you will be paying a lot in terms of spread and market maker manipulation. You will lose a lot of money like this. But this is hidden. The broker doesn't show you how much you lose from this stuff. Like from the bid and ask, and from selling the orders to market makers. Your broker can sell your order to someone else and he give you commission and he get commission like this. It's all business, but you don't know inside thing. This you need to work a lot in order to know them. And you will find out that you are losing a lot of money. But you don't know about all this. So you should learn. Mayank Bora tells me, reminiscence of a stock operator. Yes. Thank you very much, Bora, for reminding me of the book. It's called Reminiscences of a Stock Operator. This is literature. It's a novel, okay? It's not a book of trading, but it is about Jesse Livermore, who is one of the best, and it is one of the best books for motivation. If you read it, you would love to trade. And this is what I read it. It was a good thing for me because it's kind of motivation. It motivates you to try, and then you can succeed if you follow the rules. Thank you very much, Bora, for reminding me. Brishel Devi said, why you don't go to street and say Black Lives Matters, otherwise someday you will be the next. Hey, listen, Brishel Devi, we know the news and we know what's going on, okay? So it's not we are living in another world, but here where I am doing a live about business, if I have another live speaking about the news, about what's happening in America or in China or Trump, I will do that. But you see that this is a big matter, but my life is not about that. Now, when you said, what did you say? You will be the next. See, you can die by an accident. You can go by sickness. 100,000 have been dead with coronavirus. So you can be dead with anything. Okay? So it's not just about that. So try not to be overwhelmed with the news. If you want to go with people and protest in the streets are there. You just go and do it. Someone is dead. Okay? And the guy who has done the thing will be punished. And hope in the future things will change. That's what we hope. Ramin Alazov, out of the topic question, do you believe W. Gann were real trader, since he was the best trader of his times by books? So listen, for me, I didn't study this trader. I didn't study his trades, or I don't know. I have not read his books. But what I know, there is an indicator. For me, I don't use indicators from Gan or from another guy. I don't. Okay? But if he is real or not real, this is history that will show if some people, they know him, or he was with a broker, or he write books. Now, I don't know, but it's good if I find a book about him. But I will see his trades in order to tell you that he is true or not. I should see his trade, because almost all the people are fake. I'm not speaking about this guy, but I'm speaking about other people, because they don't trade and they speak about trading. When you ask them about their trades, what they do, they don't give you any information. So it means they lie. Okay? They lie because talking, anyone can talk. But when someone showed you a trade or trades, I have done this and this and this and this. It's a strategy. It has rules. Here, it can make money in the future. So for me, Ramin, I don't know this guy, WG Gan, and you said he was the best trader. Yes, I'm telling you, Jesse Livermore, for me, is one of the best traders in the world. Now we have Soros. Maybe you have heard about George Soros. Is one of the biggest traders in the world. In the world, I think there is no more getting money as him, because he is a hedge fund manager and he do crazy trades. The last trades that he get $10 billion in one trade, because he's a hedge fund manager, and the rich, they give you money. So he is known. You can't deny George Soros. You say no, he is not a trader. No, he is because all the rich he has all the rich money and he trade for them. Okay. Ramin Alazov, you say reminiscence of stock preacher. Thank you very much. Bora told me. Joe said, be scared to lose a lot of money. Yes, some people are scared. Okay, let's go very quick, because we are 3 minutes. I don't want to do like last time. Okay. Ramin Alazov, I haven't read it, but I have it at home. Yes, Ramin Alazov, this reminiscences. Are you speaking about W.G. Gan, or are you speaking about reminiscences? I don't know which book are you speaking about. If you have W.G. Gan books, read it. Try to see a trade that he showed you, and you can see if it is correct or no, or what he do has a strategy or no. Okay. Ramin Alazov said, but your example about Tesla, for example, let's say someone trying to trade the same way strategy as you are, but has only 5k, you buy 100 share, spend 80,000, but he spend 1,000 for one contract. Yes, you can. You can buy an option, and you could do the same. Try, if you have a chart, try to go to Tesla and see the times, and see, because he stays many months, and it's you should be okay, because you will never know the trend. That's why in stocks you don't worry about time. This is the problem in options. Ramin, I explained this before when I was explaining. I told you in stocks, you don't have to see the time, because you don't pay nothing. I can stay 1 year in a stock. If it's giving money without exiting it, I don't pay anything. You see that? But if you are in an option, in order to stay 6 months or 1 year, you should pay for that. And you lose a lot of money if you stay, because all this money that you spend is just renting. The option contract. Okay? Shahid Green said, hello Mr. Kareem, if a stock is very volatile and has been going up and down a lot of day-to-day basis, is it a bad idea to make a wider stop loss by studying the price of the past? Now, you can do whatever you want, but for me, I don't buy stocks that are not into a trend. What you are talking about is not a trend. I will show you. Who is this guy? Shahid Green. I will show you what you are speaking about. So, Mr. Green, I will show you two stocks. Okay? The first stock is this. Okay? So this stock has no trend. So for me, I don't buy this kind of stocks. I don't buy those. Now you tell me what stocks you buy. I buy stocks like these. You see? This is a trend. So, do you understand the idea? This is an uptrend. Uptrend. This is trading into a range. Between up and down, you are trading between them. Either you put stop loss or you don't put. It doesn't matter. So stop loss is just you put it where you want to exit. It doesn't matter. So when you are here, the stock can go to here and then go up here, go here. So you will never know where the stock goes. But stronger trends doesn't do like this. Okay? Stocks that are good doesn't do like this. But bad stocks, okay? Bad stocks are these ones here. This one. I don't trade, I trade those. I trade the uptrend. I don't trade the zigzag trading into range stocks. Okay? Now, we are at 2 hours, so I will have to Shaheen Green. Price of the past, yes. Price of the past, yes. Zigzag in the past, and then you buy, and then you put stop loss. It's the same. But see, stop loss, it is a skill. You should learn the criteria. I have a training level 6. It is called How to Protect Your Trades. Okay, how to protect your trades, training level 6. And how to follow the trend or an uptrend, it's training level 7. If you are interested, you can check them on my website, and you order the ebooks or the videos, training by videos, and you study how I do the stop loss. Stop loss, it is a skill. You should know where to put the stop loss. Two stocks having the same price, but for me, if you show it to me, I put different stop losses. Why? Because of a lot of things. And this is a training. You should get the information in order to know how to do it. It's not something online telling you, oh, do 2%, do 5%, do 20%. What if the stock you do 20% very far away and the stock goes to 20%? Are you going to lose 20% or 30%? Are you going to do that? If you say to me yes, it's over. So if you do 2 or 3 trades like this, what does it mean? It means that you will wipe out your account in few months. So stop loss, it is not only percentage. It's not just put percentage. So this idea is false. You should train yourself. So Joe said when it goes down 50%. Who tells you that the stock that go 50%, it doesn't go to 90%? Who? Tell me who teach you this? You confuse yourself. A stock when it is going down for a long time, it means that this stock, hey, the company has a problem. Mutual funds are selling their shares because they see a problem in the company. The company is collapsing. But if you are speaking about the whole market, this is another thing. You are speaking about another thing. You are not speaking about the stock. You are speaking about the whole market. Like what we see in our market. Our market in February, beginning of March, it was in a downtrend because of the news. But then it goes up. It's just because of the news it goes down. But some stocks, energy stocks, they go down for more than 50%, some days 60, sometimes 70, 80%. Some they go bankrupt, companies in energy sector, in the oil and gas industry. They go bankrupt, some companies. And you are telling me to buy? Because why you buy a loser? Why you go to stocks that lose? Why you don't go to stocks that are going up and making money? And they are very famous. Why? Why chasing losers? While you can chase good stocks that are the leader of the market. Tesla, as an example, I'm not saying anything. Tesla goes, let's say 300%. Why should I go to another stock that it is going 70% down and then I buy it, thinking that the stock will come back? Okay? So be careful of these ideas. And who tells you 50%? Who? Who is the guy who tells you, oh, a stock, is this a rule? Show me stocks that go 50% and go up. Show me some stocks. Send me an email. I will tell you why they go 50%. Now they find them 70%, 90%, and some they go bankrupt. Okay? So try not to be overwhelmed with these ideas, because sometimes an idea, it works on trading, it doesn't work on investing. It works in investing, it doesn't work in day trading. Okay? So techniques and ideas are different. Ramin Alazov said, about your comment with swing trading, I think Jesse also changed his way because of commissions. Since right now no commissions, I like swing trading also, but I think they should go together. But yeah, listen, but when you do options or stocks, even if you don't pay commission, brokers and market makers, they can play and they can take more money than commission from the bid and the ask, like in options. Now you trade options a lot, all right? Check how much you lose each time when you buy options. Even without commission, you will find that the bid and the spread, you are losing a lot of money from the spread. Count your trading, because the broker does not calculate this for you. You lose hundreds of dollars each month, but you don't know. So since you don't know, doesn't mean that you don't lose that much money. You know that? If you don't know, you should search. These things, no one will give it for free like this. I'm just telling you that it exists and your money is gone, but you don't know. If you go to your trades and see how much you lose, you will understand that what I'm talking about is a lot of money. By the end of the year, you will be losing hundreds or thousands from spread, but you don't know. So you understand? These are secrets that no one will teach you. Your broker will never show it to you. He will never tell you, oh, you lose this because of this. Especially when you buy before the market opens or after the market opens. The spread is so wide. You get ripped off always from this stuff. Okay, Ramin Alazov, WG Gun, I heard the same about Jesse. No. Jesse Livermore, now he is in history. And you find his trades, he at that time they have no chart. He makes a chart but with numbers, and he buys accordingly. I have seen his strategies before. Without looking at the chart, without looking at the company, nothing. It's just a ticker, a symbol of the company, and the price each 10 minutes or 5 minutes or 50 minutes. That's it, what he needs. And he is making a lot of money. I told you, 100 million when he died. And he was one of the guys who killed the market in 1907, the first crisis in the stock market. He was one of the best guys who made money. He made millions, where almost all the people lose money. He showed the whole market. In 1929, he has done the same. Until banks, they contact him, until some governors, they contacted him to stop and to buy back in order to exit, because he killed the market. The people were selling and selling and selling, and he was making more money until his account is explode with money. If you read and if you know history about this guy, you will be fascinated how people know how to trade. Okay? And his trades, you will find them in his books, copy books. You will find. I have his book. I have his book, and I see his handwriting. This is a piece of history which is very good to know. Okay. Joe said Elliott wave principle. I'm talking about on an uptrend. Oh, you talk about an uptrend and you say the stock goes 50%? No, I have never seen that. I have never seen a trend that has gone 50% in a trend and then it goes back. I have never seen. I don't stay. I have some exact techniques. Okay? If the trend, I see he is weak, I have strategy, I exit. I do not wait someone else to tell me which percentage. I don't use percentage. Okay? I don't use percentage. I use other techniques. It's like to evaluate the trend. I see the trend, I evaluate it, and then I take a decision where to exit, with how much money I made and when to exit. Okay? Guys, it's 2 hours 13 minutes. Thank you very much, guys, for watching and for all your questions. It was a very good session, and I thank you very much. Please, guys, if you have other questions, you can send me an email. I have other emails they have sent me. I sent them tomorrow because I'm tired right now. I speak too much. So tomorrow I will answer the guys' emails if God wills, and hope the market. Saba, he said, what was Jesse book? It's not his book. It is someone who has written a book about him. It's Reminiscences. Check it. It is here in the. It's this book. He has 2 books. Please check it in the chat room. You will find it. This is his book. It is a novel, Reminiscences of a Stock Operator. I think it's the writer is Lefebvre. I think it's Lefebvre. I think it's the writer. Lefebvre. I think Lefebvre. I don't know. Check online. And he has another book, How to Trade in Stocks. How to Trade in Stocks. It is his book, but this is it is his strategy, but it is just it's not he doesn't give all the information. It's not so good as you might think. Welcome, Joe. Okay, and you guys, any one of you, good night. Any one of you who wants to see our 15 stocks, we have one that it is 210%. It's a penny stock. I know a lot of people, they like penny stocks. This is the first one we get 210%. If those have a silver subscription or golden subscription, you will see it. Okay? So thank you very much, guys, and hope this week will be good also in the stock market. Thank you very much.